Hey, what's up, everyone? My name's Ajwritescrypto, and welcome to Trade Crypto Today. The idea of this show is to give you one idea, one opportunity, one chart, some alarm, something that gets you on the charts and trading. And guys, as you know, we had the gnarliest liquidation event of the year. Some people say 200 billion, 90 billion, 150 billion. I've seen a bunch of different numbers on how many billions of dollars were liquidated. But the point is that everybody's spot bags, we took a big hit, but then we recovered most of it. Not most of it, but like your alts are probably down 25%, which isn't really that bad. And I think my whole takeaway from this entire event is, guys, not that bad. It could have been way worse. I'm still long-term bullish, and I'll show you why. All right, let's talk about it. First of all, here's the stock market chart. It only fell, the S&P 500 from its all-time high. It only fell 3%. 3%. Just testing the 50 EMA right here. No big deal. And even look, when the stock market was here. Oh no, we lost the uptrend. Oh no, it's the end of the world. Oh, it's a bear market forever. And then right here was actually the moment that was the best opportunity during 2025. Was right there. And I think there's a lot to be said about that moment right here in terms of where we are in crypto. The S&P is, I'm not worried. I'm not worried unless it loses this alarm, which is 6158, 6158, which is local high here. That's when I'd get concerned with S&P 500. Total crypto chart. Okay, it did wick all the way to here, which is pretty gnarly. But we have to keep in mind that we did recover. We did recover, and from top to bottom, we really only lost 15%, 14.8%. Not that big of a deal. Okay. And it's not like we haven't seen, 35% dips. This one just happened really, really quick. And the truth is that if you kind of look at the range here, so let's get rid of the support resistance line, which is like obvious support resistance from where this is, and let's kind of make like a support resistance range, right? Because now we're kind of stuck on that line. So how do you know if we're going to break one way or the other? I would go from this high, the high here, and then I would put this thing in the low range of even this blow here. Okay. The bottom level here is at 3.56 trillion. The top level here is 3.77 trillion. And I'm not going to really make any big decisions until we see if this is just going to pop back up into this range here, which it could. We went bottom, top, bottom, top, bottom, top, bottom. We could easily just bounce back to the top. Doesn't have to be that big of a deal. We could still see a November Christmas bull run. We could still see that. We're not saying that's over. I'm not saying that idea is over. The 4-year cycle is true until it's not, and that timeline has not surpassed us yet. It's that simple. Either way, we're still in a total uptrend, and I'm kind of looking at this range that I just gave you to see which way it breaks before I make any big rash decisions. The others chart, okay, this one's a little bit different because we did wick out of this uptrend here, okay? We did wick below that, but the truth is that we, on the same candle, we came back into it. So this uptrend is still true for now, okay? And with the others chart is basically all of crypto minus the top 10, which is sitting at 248 billion. Yeah, it took a pretty dent, about 25%, from top to bottom here. Yep, 25%. Just like all your alts are probably only down around 20-25%. Some more than others. But most of them, the average, I'd say around 25%. All right. And I'm not really getting worried with the others chart unless we lose this low here. That level is 207. We lose 207, we talk bear market. But until and that would be breakdown confirmation from this uptrend. But we're still fighting that fight. We're still in this range here on the total chart. The S&P is just testing the 50 EMA, and the others chart, we wicked, but we're technically still in the uptrend. All signs pointing to the general consensus of it's not that bad. And sure, I think Binance did a really dirty move. I talked to CryptoFace on the phone yesterday. He thinks that people should be held accountable for these types of liquidations. A lot of stop losses were disrespected. It kind of shows, a lot of the issues with when everyone uses Binance, that Binance has too much power. There is a lot to be said about all of that. I don't think that's going to make you or save you any money at this point. The truth is no one I mean, there are, if you look at like the Aster chart, for instance, like were there indications of this happening? When I look at a chart like Aster, where it happened here, right? From right here to right here. Okay, but if we shorted the 207 alarm, or if we shorted the 190 alarm, or if we even shorted the 181 alarm, all alarms that we all had from this channel and the Telegram group, if you were short, you would have caught that. You know what I mean? So like, it's not, I'm not saying you should have caught this. I'm not saying you should have sold all your spot bags, because that's like impossible. But like, if you're paying attention and you're leverage trading, at least on this chart, it was there. It was there. You know what I mean? So I'm not telling you it's your fault. My spot bags took a dent just like everybody else's spot bags. And that's why you separate your spot bag from your leverage bag. Very simple. But at the same time, you have to be willing to ride the roller coaster. This is a part of the roller coaster. And the emotions are high right now because everyone has their money involved. But I want to remind you yet again, during this year, during 2025, oh, the S&P 500, oh, it's the end of the world. Oh, we're never going to make our money again. Oh, we're never going to do anything again. And that moment right there, when everyone was the most freaked out, when everyone cried their eyes out, that was the moment you should have bought. That's when you should have bought. And that is the lesson here. The people that are panicking, the people that don't know what they're doing, yeah, you're probably pretty freaked out. But if you've been in crypto, you're used to this roller coaster, this is an opportunity. This is an opportunity. The sea level is rising. We have pro-crypto regulation. We have pro-crypto politicians. The Grim Reaper of regulation is gone. We did what we did in 2021 without ETFs, without Wall Street, but now we have to understand that we have institutional adoption. Now we also have to account for institutional manipulation. So the good comes with the bad, but overall, the sea level for crypto is rising inevitably. And the total crypto market cap will be between $8 to $10 trillion within the next 4 or 5 years. It could happen next month. It could happen in 4 years. But I'm telling you, long term, the sea level is rising. And if you're freaked out, maybe crypto is not the industry for you. If you're willing to ride the roller coaster with the rest of us, put your seatbelt on and let's look at a leverage trade. All right. So a chart that I have been coming back to time and time again in terms of leverage trading is Aave. Aave has been a chart that's been, it has had its moments, you know, kind of looking at a 2 hour here from like, you know, July, August, September, you know, like right here, you know, kind of big drop, 26% drop in 16 days from back up the hill, you know, 37% increase in 12 days. Aave is not like the kind of coin you're trading and you're in and you're out in an hour. It's the kind of coin that you trade and you're in the trade for a little while. And in a kind of the intra-week type swing trading. It is down about 40% top to bottom, not including the wick, bottom as in the current price, basically in the past 50 days. But what do I like about Aave right now? What I like about Aave right now, a couple things. One, we are well above the price right now is above the July low, the June low. Aave went down to 213 right here. And look, everyone right here was probably like, oh no, it's the end of the world. But that's actually the moment you should have bought. That's the moment you should have bought. When everyone's the most freaked out is normally the time you should buy. And I think we're probably in that scenario here once again. And guys, I don't want anyone to say Aave or any other coin kind of crawls from here. I don't want any influencer or anyone on Twitter to say, oh, this coin is up, measuring from the bottom of the wick. This coin's up 400% in the past 30 days. Guys, we are not allowed to measure from the bottom of the wick because most people couldn't even get in their accounts at the time, which was pretty scary. The thing that shouldn't happen in crypto. But no measuring from the bottom of the wick. We are measuring from the bottom of the candle. From the body of the candle. It's that simple. No, oh, look how far we're up. You're not allowed to measure from the wick. So what I'm saying here is that this was an event, but when I look at this chart, this means nothing to me. This means nothing to me at all. All I see is the body of the candle, which ends right here, which aligns on Aave with this low here that I mentioned from back in June. All right, so that will be a short alarm. Okay, that level is 212.79. Okay, so that is your short alarm for Aave. Bam. All right, now what about the upside here? Well, obviously we're going to zoom in a little bit. All right. Of course, that we're going to have this alarm here. I would pull this up a little bit because it matches with so much stuff. You could even run 2 alarms here if you want. I would run this one here for the more local support resistance at 258.7. That would be the low from this batch of candles. And then if you want to run this level here, which is 248 exactly, that is the low from this batch of candles and very close to the local high. All right. So that's kind of how I'm interpreting this. Even if you want to pull this level down to just line it up to the local high, that's fine. That would be 244.9. That will be my long alarm for Aave. And then this level, previous support resistance 257, becomes the target. Okay. And I will type this one in here for you as well. 257. All right. And really, I don't hate that because this breaks out. See, this had a really sharp drop here. And you see actually the point of control is all the way up here. And there's actually a low volume node right here. I think if the 244.9 alarm goes off, I think that's a free trade to 257. And that would be a 5.1% trade. And from the 244 alarm, not the current price, but from the 244 alarm, getting back to the point of control, that's a 19% trade. All right. So this is the current range I'm looking at for Aave. We're longing 244.9. We're shorting 212.7. That's my conditional range for Aave. If you want to get fancy on the 12-minute here, you could kind of pull across this way. All right. You could kind of draw this little local docal here and then pull along above that high. And as long as it closes above the 50 EMA at 236.9, well, let's just call it 237. You could try that 237. This is more of a higher risk level where 244.9 is a more sure bet because you're breaking the range right here, where 237 is just you're breaking a high. So if you want to risk it and go long for 237, you are getting an extra 3% out of the trade, but that's a higher risk trade. So if you're willing to take more risk, go long at 237. If you want the safer trade, go long at 244.9. There you go. That is my chart for the day. I am giving 2 more charts to the Alpha Telegram group right now. They have high volume. They're out of place charts on Bitunix. If you know how to find the coins I like, you might already have your eye on this one, on these 2, but I'm posting them in the Telegram group right now. Also, I put all of my week 6 NFL picks on No Sweat Bets on the main channel at Ajwritescrypto. We've been killing it in the No Sweat Bet Telegram group. I'm up over $50,000 just sports betting since when I went to Vegas about 10 days ago. Not bad for 10 days, especially when everyone else lost money in the market. So sports betting, man, I'm telling you guys, it's not gambling, it's a strategy. And this strategy we have discovered, I've been working out on Polymarket, is life-changing, and we've been killing it. So if you want to sign up for either of my Telegram groups, send an email to ajalphagroup@gmail.com. Make sure you smash the like button, subscribe to this new channel. We're almost at 1K, which isn't bad. This channel's only been around for like 2 or 3 weeks. I'm not hating on it at all. Get rich or get wrecked. Smash the like, subscribe, and don't forget to trade crypto today. Peace.